How do you navigate determining your selling price if you're a seller and your offering price if you're a buyer? Hey guys, it's Dustin Oldfather from the Oldfather Group of Sotheby's International Realty and owner of Motto Mortgage and We Insure Prosperity. I had a client that was asking me the other day how they should price their home, especially when things are ascending. What's interesting about what's happening in the current market is we've got very low inventory. We're about a month and a half of inventory in most places. And the demand is even higher than it has been because so many people want to move to the suburbs or the exurbs or out of their typical metropolitan area. So there's huge demand, which means the best inventory is selling quickly. But the way the appraisal process works is it only looks at prior sales that have closed, not what's pending at higher price points, currently. So you're always kind of working in the rear view mirror, and when the market is ascending, there's a drag on that price. Even though the market may be willing to pay more, the appraisals won't allow it, which dictates financing, unless you want to bring more cash to the table, which a lot of people are not willing to do. So if you're a seller, you want to price slightly ahead of the market, still be in the market, unless you have an aspirational property that's very different. Aspirational pricing strategy would be something where we create an arbitrary price just based off of what the feel for the market is or the appetite in a certain range, whether it's between 2 and 3 million or above, and say this is where it feels right, and then see how the market responds, sort of a testing strategy. But for most of us, you want to price slightly ahead of the market so you have some negotiating room. If you're closer to market price, you'll see multiple bids and it will bid up. Right now, with things accelerating, you will be able to select the best contract, but it could trip you up and maybe leave a little bit of money on the table. So we're counseling clients to price slightly ahead. If you're a buyer, you have the other dilemma, which is that prices are accelerating. There's not enough inventory. There's not enough places to go or to get what you want, especially if you have to move. And so in that situation, sometimes, every situation is different. I'm not counseling everyone to do this, but you may agree to pay, above the asking price and or have an escalation clause to a certain point. Remove as many contingencies as possible. Keep your financing contingency in, and then you can navigate the appraisal as a limiter or maybe a potential renegotiation depending on the price agreed, and then where the market is when you get the contract. Markets do simmer down from time to time. Things are very frothy right now, but within that window of time where you've gone to contract, maybe the market pulls back a little bit. The appraisal doesn't quite agree with the offering price, which is not uncommon. As we discussed, we're working off of prior sold numbers while we're climbing, and so we're not looking at where the market is going from a financing perspective. And because the banks are not, are concerned about risk, they won't overlend, at least for the most part. So appraisals have gotten relaxed, meaning that they're coming in often at the contract price, but that's not always the case. So you got two sides to look at depending on if you're a seller or a buyer. If you're a seller, price slightly ahead of the market is my advice. And if you're a buyer, limit the amount of contingencies you have, write a strong offer, and then navigate that through how the appraisal responds to the offer that you've written.